Welcome to This Explainer. Today, we're going to dive headfirst into the immense, honestly mind-boggling scale of the Forex market to see who is actually pulling the strings. We hear about currencies bouncing up and down all the time, but it's time to peel back the curtain and look at the real architects of this massive financial landscape. Because think about it for a second. Every single tick of the clock, millions of people and giant institutions are buying and selling currencies across the globe. It's just a constant flurry of activity. But amidst all that noise, we've got to ask the ultimate question: who holds the real power out there? Who are the heavyweights, and who is just along for the ride? Okay, to really get a grip on this, we have to stop looking at Forex as just a sterile chart full of red and green lines. Instead, think of it as a massive living ecosystem. It operates 24/7, nonstop, and every single participant in this space has a totally different purpose. Some create the demand, others provide the liquidity to make the trades happen, and together they keep this incredible machine running around the clock. To understand how the whole thing functions, we need to look at the hierarchy. Let's start section 1 right at the top of the food chain: the apex predators, central banks, and mega banks. Right at the very absolute top, the central banks. And what's wild about this is their primary goal isn't actually to get rich or make trading profits, not at all. Their job is to maintain economic stability for their countries. But just because of their sheer massive size and authority, they are the ultimate influencers. To pull off that stability, they wield some incredibly heavy tools. They control interest rates, they step in to regulate inflation, and they actively manage their country's money supply. I mean, when a central bank just tweaks an interest rate or even just hints at it in a press conference, currency prices can whip around dramatically in literally minutes. That is absolute concentrated power. Sitting right alongside them in that top tier are the commercial and investment banks. We're talking about the truly massive global financial institutions. These guys are in the trenches every single day, handling a volume of foreign exchange transactions that would just make your head spin. These banks are basically the engine of the market. They're swapping currencies for governments and huge corporations. They're executing mega trades for wealthy clients. And yeah, for sure, they're trading aggressively for their own profits too. But because they process such colossal transactions, they pump the essential liquidity into the market that keeps the whole ecosystem flowing for the rest of us. Moving right along, let's drop down to section 2, the middle tier. This is your big business, funds, and governments. The crucial takeaway here is how wildly different everyone's motivations are. Up top, central banks want stability, right? But right below them, you've got global corporations just trying to run a business, standing shoulder to shoulder with hedge funds who are hunting for pure, unadulterated profit. Let's zoom in on those global companies for a second, the multinational corporations. They are a massive force in the market, but here's the kicker: they aren't generally trying to speculate. They aren't placing bets on whether the euro is going up or down tomorrow. They're trading simply because their day-to-day international operations demand it. Let's put that into perspective. Imagine a Japanese automaker. They sell a ton of cars in Europe, which means they're taking in a massive pile of euros. But their factory workers, their local taxes, their utility bills back home, those all have to be paid in Japanese yen. So they're literally forced to make these massive currency exchanges just to keep the assembly lines moving. It's mandatory. Also hanging out in this middle tier, we have the large investment firms and hedge funds. Now, these are the aggressive hunters of the ecosystem. They manage billions of dollars, and they're constantly analyzing global trends, interest rates, geopolitics, you name it. And because of the billions they're throwing around, even a single, perfectly timed trade from one of these funds can physically push market prices. Oh, and we definitely can't forget about governments. They're swimming in this tier too, constantly exchanging currency to repay international loans, or maybe buy foreign goods, or manage their national reserves. And if things get super rocky financially, they'll even partner directly with their central banks to aggressively defend their national currency. All right, let's head all the way down to the bottom of the food chain. Section 3, the micro level: brokers and retail traders. Now, you and I can't exactly just walk into an investment bank on Wall Street and ask to trade some currency, right? We need a bridge, and that is exactly what Forex brokers are. They give us the slick trading platforms, they execute the orders, and they connect us directly to those giant liquidity providers we were just talking about. Without them, everyday people wouldn't even have a way through the front door. Which brings us to the retail traders. Thanks to modern tech and those brokers, this is just individuals sitting at their laptops or scrolling on their phones, trading their own personal cash from a coffee shop anywhere in the world. And sure, while they might make up a relatively small slice of the overall trading volume pie, they are still a super vibrant and vital part of the ecosystem. So, we've mapped the whole thing out. Let's get to our final section, who holds the power? Whales versus the retail market. Time to finally answer, who's pulling the strings? Look, the reality is not everyone has the same muscle here. Central banks, the big investment banks, the massive institutional investors, and the global corporations, they are the absolute whales. They're the only ones wielding the kind of concentrated, heavy-duty capital required to actually shift global currency prices. And this creates a pretty harsh but fascinating reality in the financial food chain. On one side, you have the institutions that literally create the trends by dropping massive capital. On the other side, the retail traders. Basically, retail traders are just trend followers. They react to the giant waves the institutions make. They might surf the wave, but they definitely don't create it. So you might be asking yourself, why does knowing this specific hierarchy even matter to you? Why map all this out? Well, it matters because understanding who is playing the game tells you exactly why the market is moving. It gets you past just staring blindly at a sterile chart, wondering why a line spiked. Suddenly, you start seeing the powerful institutions operating right behind the scenes, making calculated moves. It's like seeing the code in the matrix. We've met all the major players today, but honestly, it leaves us with one massive puzzle. We know who's trading, but what about the actual plumbing of the market? How exactly does a single click on your phone traverse the entire globe to reach those apex predators in the interbank market? The deeper you look into this network, the more mind-bending it gets. We're going to unpack that architecture next time, but for now, keep questioning the ecosystem.